You've purchased that property and you're on your way to become a property mogul. Welcome to the final part of Property and Tax Unpacked. In the previous two episodes, we tackled income and expenses and also your tax residency status. We've reached the final hurdle, selling your investment property and dealing with capital gains tax, or CGT. CGT is the tax you pay on the profit you make from selling an asset. This calculation is simple. The selling price minus your base cost equals your capital gain. Remember, your base cost includes the original purchase price plus those property improvements we discussed in part 1. And then for individuals, only 40% of that capital gain is then included in your total taxable income for the year. And that amount is then taxed at your marginal rate. This is where the residency difference becomes massive. An SA resident gets an annual CGT exclusion of 40,000 Rand per annum. More importantly, if the property was ever their primary residence, the first 2 million of the gain is completely exempt from CGT, given some rules about prorating. A non-resident, on the other hand, also gets the 40,000 annual exclusion, but not the 2 million primary residence exclusion. This single factor can vastly change the financial outcome of a sale. Finally, our attention to all non-resident sellers. You face a mandatory withholdings tax at the point of sale. This tax is withheld by the purchaser or their conveyancer and paid directly to SARS before the sale proceeds are released to you. The rate is currently 7.5% of the gross selling price for a natural person, non-resident. It is not on the profit, it's on the total price. The reason for this is to ensure that SARS receives the CGT due from a non-resident. You will eventually submit a tax return to calculate your actual CGT liability. And this withheld amount acts then as a credit. Investing in South African rental property is rewarding, but the tax implications are complex, particularly across residency lines. The key to success is meticulous record keeping and ensuring you have a tax practitioner who understands the nuanced laws for both income tax and capital gains tax. Thank you for joining us for Property and Tax Unpacked. Cheers.